I am really delighted, and I want to thank David Bomser for enabling all this, that we have this wonderful, wonderful facility at SAP. A little tough to get there, but that'll improve over time. But the facility is wonderful. And I wanted to turn over for a moment to Anne of SAP to talk a little bit about this space and its purpose. So I will give the dual microphones to her.
Okay, see if I can do that. Okay. Okay, so first of all, a big warm welcome to SAP's Leonardo Center here in New York on Manhattan. I'm very delighted to see you all here. This space here is part of SAP. We have 5 floors in this building, so this is the lower floor of all the floors. And it is a place where the top floors is where we bring in, is a big customer space, our executive briefing center. And we kind of call this is the garage. It's kind of like, it is the Leonardo Center. SAP is setting up customer innovation spaces all over the world. And this is one of the first ones. We just opened up recently one in Paris. And we go into Sao Paulo and Bangalore here in during the summer. So the space here is really where you speak innovation with purpose. So you might be familiar with the 17 UN global goals. You see them different places in the space. When we speak innovation, we speak with it with a bigger purpose that we just come up with some cool stuff that we're doing. And that is very important for what we want to talk about here. The space, you saw when you were getting a little bit of food, that there is a wall with a lot of logos on. And some of the logos, you're kind of wondering, what does that have to do with SAP? But this space here invites the tech community of New York. It invites the tech community of the world. There are partners like Rocket Space, which is a huge accelerator in Silicon Valley, who is also here in New York. I literally just landed today from Seoul in Korea, where I was together with Rocket Space. In Korea, you also see partners like Sapphire Venture. So we have ventures. We have the universities of New York City here, NYU, Columbia, Cornell Tech, CUNY, and other universities. And not to forget that it's a huge customer space. So what we want to facilitate in this space is really matchmaking. So when you come into the space, you will find incredible people. I know there's incredible people here who is going to have a great evening. So we really want to facilitate the conversation about innovation. So it's all different kind of things what is happening in the space. And it's open for everybody to come in and be part of talking innovation with purpose. So there are meetups. We have a meetup scene. We actually do a little bit of advertisement here. We're actually opening up, it's called Science Fiction Wednesdays. So we see how science fiction is now really kicking in. So you have design thinking, you have exponential thinking, and now science fiction is really thinking is kicking in. So there's a lot of stuff going on in the space actually every single day. So I hope you have a great evening, and thank you so much for being allowed to say a couple of words.
Thank you, guys. And I'll do my dual microphone thing for a moment to make sure the webcast people can hear. Loyalty is very, very important. Getting customers engaged initially, acquisition, is hard enough. But keeping them engaged, keeping them involved, keeping them around is very hard. And that has changed over time, the difficulty of doing that. So with thanks to David Bomster and everyone else here, whom I introduce in a moment, we've got a fantastic panel together to talk about different ways that technology and is really enabling and enhancing the ways that one can keep customers loyal. So first off, as a moderator, we've got here, right directly to my left, Anthony Gray, the Chief Information and Operations Officer of Nikia DX. Did I get that? Got it. And he's been in financial services for 30 years, and actually, really, he can't have been longer than me. And he's worked at Mutual of Omaha, KPMG, American Express, and Royal Bank of Canada. Then down to the far right side with the exuberant facial hair, we've got Sosh Howell, who's the Chief Technology Officer of First Performance Global. And he's been in technology roles for a long time. And prior to First Global, he was co-founder and chief executive of ApptOn, a company that provided mobile application development for iOS and Android. And then we've got Nilesh Yagnik, thank you. Oh, I screwed that one up. Of Synchrony. So think about it. Synchrony provides a tremendous number of the cards that we use in retail stores all across the country. And Nilesh leads the Loyalty Center of Excellence and is responsible for shaping Synchrony's loyalty strategy. And finally, we've got Ethan Chung, who's at MasterCard. He leads the merchant loyalty solutions for the North American markets. And previously to this, he was at American Express and launched the Plenty program, which many of you may know as one of the premier coalition loyalty programs. So without further ado, I'll turn this over to Anthony and enjoy. And if you've been in NYPAY events before, you'll remember that they're very interactive. So if there are questions during it, feel free to make yourselves known. We'll get a mic to you and we'll get that question addressed.
Thank you, David. I thought we were going to do something.
Oh, I'm sorry. Yeah, David, I'm sorry. I completely spaced. David Baumser first will stand up and do a little intro about an example of SAP-enabled loyalty solutions that have been implemented.
Well, thanks, David. Well, first, it's good to be back in New York. I moved out of New York about 15 years ago to go to Florida. And everyone said to me, how could you go to Florida? How could you take the summers there? They're not as bad as they are here, I said. But one of the things I've done to kind of stay connected to the New York financial services and payments expert communities is to join a group like NYPAY, where I got introduced to it a couple of years ago by one of my colleagues, and it's been just phenomenal to kind of stay connected with everyone and kind of exchange ideas and learn new things. So I had approached David with an idea of, hey, we got this great new center here at SAP. Let's go ahead and let's host an event. I think how many of you have been to Hudson Yards? Is this your first time, anyone? So it's kind of unique down here. This is like the Canary Wharf in New York, right? We're building this great complex. There's no one down here, lots of construction. Show up before all the good views are gone. So we've done it. So the topic I wanted to talk about was customer card loyalty. So we have a customer. They're in South Africa. They came to us, and they're an insurance company. They wanted to launch a bank. And what they wanted to do is promote wellness. So their idea was a debit card. If you go out and you purchase fruits and vegetables, you get positive loyalty points. If you go out and buy beer and cigarettes or other items that aren't good for your health, they want to take those points away. So, well, how do you do that? We looked at it, scratch our heads. We're looking at the card networks. We weren't really seeing that data. So I put together just a real quick overview of kind of how we made this happen. So clear the way. I want to introduce our partner, Alex Walta from Alceda. He's a managing director, and his team was very involved in this project of how we were able to kind of look at this legacy environment of card networks and switches and fraud detections, lots of existing infrastructure, and how are we able to drive this new loyalty program that didn't seem possible because of all of the technology constraints. So Alex, you want to walk everyone through kind of how we did it?
Yeah, of course. Okay. So, okay, I stand away. Okay, so the setup was an insurance company in combination with a bank, so a small bank, large insurance company, and they issuing cards. This was their only business, but they want to combine both insurance world and the banking world. So the insurance world was in place, but they had to replace the banking part. So they implemented a completely new landscape. They have, for example, the connectivity part, of course, to the card network. They've got services. They have a payments hub system for managing all the payment transactions. They have some banking services for the card account, managing the card transaction, customer data. They have an ERP system in place. So it was a whole new platform. And of course, the card enhancement, this is the card program, the loyalty program itself. And as explained already, they have two things. First of all, the loyalty program, but they also use the data for other purposes, like for marketing. They sell data. In South Africa, it's allowed, so they're allowed to sell the data to other companies. So they use them for the insurance products with permission of the customer, of course, but there are now legal, let's say, constraints in South Africa in this place. And they implemented this loyalty program here. And what's great about here, they have everything on one platform, and in memory, S/4HANA is an SAP product, SAP HANA platform, in real time, all data available. They can analyze, they have analytics in real time available, where a customer did shop, what did he buy, all the details are provided by the card network provider. And then you've got the loyalty program connected to apps. And of course, you get the marketing side, you get insurance product offers, you get other products offered, and of course, the card's loyalty program itself. But the key benefit of this whole program is that they implemented everything on one platform, in memory, a real-time platform. They really immediately can see, our customer can see immediately on a loyalty account what all transactions, everything is in place. So I think that is enough as a high-level introduction, and I want to hand over, Anthony, I don't know.
So everybody make your way back. Thank you. So thank you for that intro and explanation. So this is an interesting application of loyalty and incentives. And I just want to correct the record that beer shouldn't be a negative points element. The research is there that suggests it's actually good for your health. But we can debate that at another time. So thank you again, SAP, for allowing us to use this space for this pretty interesting discussion. So we've got a few questions that I'm going to tee up to the panel, and hopefully it'll spur some discussion with the folks in the audience as well as online. So our first question is, we understand that payments is an area that continues to be under a great deal of pressure, right? We've got regulations, we've got the cardholder, the card member asking for different types of services from the card providers. We see the associations trying to create new and interesting products to attract and retain their customers. So how have some of these forces impacted the economics and the rewards and incentives in the cards business? And I'll pose that to Nilesh.
So thank you, and thank you for having me. Great venue. Thank you, SAP. So I think there's a couple of questions in that question, right? And if we think about it, from a regulatory standpoint, right, I think all of us who are the issuing side agree with the regulators that we should be transparent, we should be conspicuous, and we should deliver the advertised offer that the consumer is expecting. So we're aligned, our goals are aligned. That's not a headwind. What's really challenging is the solutions a lot of you in this room actually present. And that is to deliver these rewards is getting more and more complicated, right? And at Synchrony, we have to integrate with our retailers' point of sale, with their CRM. We have to pass files. We have to score things. We have to suppress things. And sometimes we get that wrong, right? And we immediately try to remediate it. And we want to be on the good side of angels because this is the right thing to do. So as I think of regulation, I don't really have a problem with it. I think it's a better customer experience, and we're all about that. As I think about economics, and I'll talk about that a little bit separately, and that is this month's Kiplinger, right? They said the 6 top credit card issuers in the United States, they're issuing twice as much rewards than they were doing back in 2010. So you have this points arms race taking place, right? Now, if you look over on the retail side, what do you have? You got this 5% thing out there, right? And that's pretty expensive. So now if you're one of our partners in retail, if you're a card issuer and you're giving very rich rewards, can it continue? I'm going to go with I don't think so. So what do we and how do we navigate both the regulatory side of things and how do we navigate the economics of it? And we just got to be smarter with targeting. We have to have more effective campaigns, more personalization. And really, I'll go back to the solutions you folks in this room present are the things that we need to partner with to give the customers a better experience. And at the end of the day, this is the new normal on regulation. It's a new normal on customer expectation, on customer experience. And we just got to get good at this.
So anything to add, Ethan?
Yeah, I think to your point, Nilesh, this is a very interesting time for us. And I think every market globally is very unique in terms of the challenges that they face. And I think, can't speak for all of them in sort of one first swoop. I think, similar to you, customers are the North Star at the end of the day. And I think, it's important to remember that from the standpoint of you want to retain the customers that you do have today, because acquiring customers is a lot more expensive in the short term, but it's more long term. It's more costly to replace the existing customers that you have. So I agree with you that there is much more of an arms race today on the acquiring side to get new clients. But I think from that standpoint, a lot of the opportunity revolves around being able to reinforce the value of the products that the existing cardholders have in their hands. I think part of the challenge, and I'll be quite candid about this, is sort of in the loyalty space, it's a low involvement category. You don't wake up in the morning and say, great, I'm going to go out and redeem points today. There are strategic opportunities to be able to reinforce the value of why they created that relationship in the first place and do so at the appropriate times. And I think that is a key to being able to address some of the issues that are happening in the industry, especially as things get much more constrained around the economics.
So one of the things that's interesting about the loyalties is we know that on the banking side that rewards is actually a liability on the books, right? So the idea is to get redemptions up and keep that customer transacting and making sure that the loyalty is actually relevant for the consumer, right? Have you seen have regulations impacted that?
Yeah, well, I know a lot of us mainly work in the U.S., but I think the other thing to keep in mind is the PSD2 regulations in Europe. And like all of us, even if you're only like working in the U.S. right now, we all got to be watching that heavy because I think some of that open banking is going to be coming here next. And so we need to be learning from what Europe is starting to go through right now, and I'd say that's one of the biggest regulations that we're going to see for a while, which for those of you who aren't familiar, if you're an issuer, you're being forced to open up your data to any aggregator, right? So that relationship, owning that relationship, you might, if you don't keep up to speed, you don't get to own that relationship anymore. Someone else is going to take that from you. And I think as far as regulation, that's a really important thing for us all to be watching right now.
Do you see that coming to the U.S.?
Yeah. In multiple ways. So even if it doesn't come with regulations, some of the bigger banks who operate over there are going to start doing that here too. And a number of bigger banks are even starting to openly embrace that because they also see innovation happening and okay, maybe there's going to be some few cases where even if they don't own the relationship, the new features that come out of that will drive the card to be top of wallet. So I think Citi does a number of events worldwide where they're opening up APIs to developers. So they're being proactive. I think I've seen a few things like Bank of America just kind of start to play around with that a little bit. But if good things happen out of it from Europe, which I think they will, I think the U.S. will likely follow suit.
So not so much from a regulatory perspective, but best practices from Europe, imported over to the U.S. and force others to compete.
Yeah. Well, and the other thing there is because the big issuers are going to be threatened by this, they're going to innovate, right? So even if we don't have the regulations, we got to keep an eye on that innovation because it can only help us.
Any questions from the audience with regards to the economics of loyalties? You're good?
No, I have a question, and I wonder if there's any kind of negative repercussion. So I understand in terms of addressing liability, now you're having more and more points expire, right? So I'll use, Kohl's as an example. Admittedly, I'm a Westchester resident, so up there, they have their monthly rewards, whatever it's called, they expire at the end of the month. Other stores, you can just use it during this period of time, et cetera. Or, I go and I buy something and I get a big reward for my next purchase, which has to be like in the next 3 weeks, but I just made a big purchase. So, a lot of I'm wondering whether there's any kind of backlash. I mean, I really want rewards anytime I want to shop. I don't want to shop according to your schedule when you think I should come back, and it makes me mad, but maybe I'm just too much in the industry. Do you see any backlash to that, the kind of expiration or the forcing people to use limited, that kind of rewards are less and less effective? Do you see any change, or you just think that's going to happen because they have to deal with a liability issue and there's going to be expiration and kind of forced periods of using them?
So I have a perspective on it, and I love that, and I love that I can talk about Kohl's because it's not one of my clients. They're fantastic. They do a great job. They do an absolutely great job. So what do? They don't just provide you points. They also give you, 8 times a year, 15% off. And if you're their best customer, they give you another 2. They have a robust engagement strategy. So if there's a sting, for, using Kohl's specifically, to an expiration, hey, by the way, there's a sale. And what do they do a great job of for those of you who shop there, right? I was there with my teenage son, and you end up saving more than you spent, which is always the wow factor. But that's the entire customer experience, not just the expiration. So we work with our partners. We don't just dismiss the negative part of it, but how do you substitute it? How do you stay relevant?
I'll give you another example. Because again, I have teenage kids, right? So I don't know about it. I have my wallet full of my Kohl's offer online in my wallet, and I arrive on a Tuesday, and no offer is good on that particular Tuesday. And so that is actually, if I had an option, I would. But I just wonder about that, making things so complicated and so complex, and really kind of irritating your best customers. And maybe I'm the only one. But.
I don't think you're the only one. So that's the challenge. I think this is one of the reasons why this discussion is interesting, is the customer experience is sometimes lost in the economics, right? Because you have to manage the liability. So no bank wants a growing liability without a way of reducing that over time. So, expiry dates and things like that are part of the business strategy. I don't know that there's a secret formula for this. I don't know what it is. I think that's part of the evolution of the space, and that we're trying to understand.
So I just wanted to make a counterpoint to that, because I have quite from a consumer perspective, because as women, you shop with your son, so, la bravo to you, but, usually it is the moms who are out there with the kids buying the clothes. So I have a Kohl's within a mile of my house. My mom is like that best customer of Kohl's. I cannot keep up with it. I'm sorry. I never have used Kohl's cash in my life. I can't figure. My kid needs a new shirt. I go to Kohl's and I always miss the sales. So I think I really understand what you said. The rewards are a liability on the books, but not everybody's going to be using those rewards. So I don't know how much this is contributing to the conversation, but just not everyone uses it. It's out there. I think of Kohl's as a place where I'm going to get some discounts, but I don't. I spend the money. So I just wanted to offer that as an alternative consumer perspective.
Yeah. I think the interesting point that you just made is all too often today you see these programs, they're created for discounting purposes, and they're not engendering true loyalty. Exactly. And I think what you see in the marketplace is like over half of the audience basically disengages because they don't earn enough. They don't know what to do with it. And I think this is an opportunity where there is innovation in the marketplace today. You are seeing things like pay with rewards, because we understand that certain items are going to be much more constrained. You don't want to be constrained with the catalog. You don't want to be constrained with travel outlets. So being able to have that flexibility to take your points and redeem them on your schedule is something that we believe is going to be much more prevalent as the industry moves on.
Yeah, I have loyalty to Kohl's because of traditional retail values. It is 1 mile from my house. It's got the 70. So. Just a couple points for traditional.
Another question over here. And I think a point of order, I think if you put your hand up, we'll get the mic to you so the folks who are online will be able to understand the question as well.
So a lot of people are mentioning, points which they don't use, they expire, and we understand from the point of view of the company also that they have to basically have a limited liability. One of the things which I think so there is happening is sort of a clearing house. You're saying that you can utilize your points if not for one but for another one. I think so that's what we need more, because what you have is not everyone okay, you went to a particular place, you got a particular points, but you should be able to use it for something else. I think that's a trend. That's sort of the expectation also from the customer, saying that they should be a little more fungible. So it's basically clearing. You're creating like a clearing house that you can apply it across anything right now.
Yeah. And we're definitely seeing demand for that more and more, and I think that the customers are starting to expect that, right? If enough companies do that, and your company doesn't, you're a little bit sub-quality compared to the other standard brands that I associate with. So yeah, I think that point is just spot on.
And one way we also look at it is redemption is a good health indicator, right? And what does good look like in apparel? Redemption 70% is good. Right. I don't know what Kohl's is, but I would venture to say it's pretty high because I've seen their data on their card programs very successful. They're yes to Rewards is also a very successful program. So when I'm in front of CFOs of retailers, they like it when the redemption's low, and I said, your program is failing, right? It costs them less, but at the end of the day, and so our job is to show them that loyalty drives incremental behavior. Remember, loyalty is an outcome of the whole customer experience, and to that, being 1 mile away is also part of the customer experience, right? So it's the whole experience.
And what I've noticed myself, because I do work with customers when it comes to this, and I was having a conversation with one of the panelists, it's that to mitigate that liability of those points, it's more important you have outreach to your customers. Now that could be geospatial, if they're at a partner, have them go in, but also too when they're sitting there in bunny slippers at 11 o'clock at night, and they find out they can use these particular points, maybe with a predilection of what they've been looking at in the past, and join those merchants together, that's where the magic starts to happen. And I think I'm starting to see a lot of companies are thinking of the outreach things, rather than just saying when you get on their site, oh yeah, I got 10,000 points. Who really cares? You want to get out there. You want to get rid of those points as quick as possible. And again, guys, that's what I'm seeing in terms of working with customers, is that's how you clear it off the books, by aggressively working with your customers and making a positive experience. So it doesn't end up they have 20,000 points to your point, where they expire. Oh, darn it all, I missed out. What happens? Maybe you go to another company that has a better loyalty program. Not that it would happen with any of yours. But I just wanted to give you that observation that I see it with a lot of customers now, that they're starting to think of aggressive outreach, geospatial, and I think you have a comment to that?
Yeah, so geospatial is one of the things we're looking at, but both from the geospatial perspective, but also from the associated purchase perspective. So, and by that I mean in a geo fencing sort of capability. So let's say you're at the mall, and you just bought a pretzel right across from Kohl's, right?
Right.
That's the time. Hit that special reward offer.
Right.
Maybe it's just a 5%, 10%. But looking to get that purchase, because again, they don't want to lose revenue on your existing spending habits. They want to drive new spending habits.
Exactly.
And that's where things like geofencing and associated transactions, that's going to be one of those key innovations that we see.
But the other thing too is that, and again, with somebody else that I've worked with, is that you have to look at cart abandonment. When you are cashing in, sometimes they have no idea. You have to really be a rocket scientist sometimes to figure out how to apply the points to shopping. I won't say the credit card company, but none of you belong to that company. Sometimes you just give up and say, oh, I'll take a heavily discounted cash. But think to yourself, that if you were able to then figure out why did they abandon the cart, and then go after them. Now again, the United States is different than Europe with privacy and laws like that. But nonetheless, if you do things like that, I think that it would add more oomph to a reward program.
Well, yeah, and if you can drive that, and they get that 20% discount, they actually use it where they've struggled to use it, right? That's going to be that positive experience. That's going to be, it's not that they got 20%, it's that they had that positive experience that's going to create that brand loyalty.
Right. It goes to the more you spend, the more you save, right?
Yes.
Another question in the back there. It's interesting. I don't know if we're going to get off this topic. I'm trying to.
You may be perpetually stuck. No, I mean, I think there's some great points that have been brought up here, and I think we are talking about loyalty here in terms of points and programs. But I think Nilesh, you made the point, or I think the. Your colleague here from MasterCard made the point around you don't wake up in the morning thinking about loyalty points. So if you actually think about, from first principles, what loyalty really is, I don't think it's about points or programs. It's a sense that a given brand truly cares about you and your wellness, right? And so this notion of having to spend more in order to save, seems a little bit, antithetical to that. So I guess the question or challenge that I'd pose to the panel here is, if you think about how the world has changed over the last, call it 10 years, with platforms like Facebook and Pinterest and even the sharing economy, right, where folks aren't necessarily that inclined about what they've done in the past as much as they are actively sharing what they want to be achieving in the future. Where does the loyalty paradigm that we as issuers, processors, associations fit within that, right? I mean, we have a platform like Pinterest, for example, where there are millions upon millions of things that people have talked about what they want to be buying in the future. Would love to get the take of the panel on that. I mean, I would say that I'm coming from it from the founder bias of having started a company that does exactly that. Instead of looking at your past transactions, allow and empower consumers to talk about what big purchase they want to be doing in the future, and utilize that as the center of gravity to drive commerce and loyalty.
So I want you guys to have a really good build up to our last question, right? Because our last question actually addresses that kind of dynamic, and we'll talk about it as the trifecta of economics around cards and loyalty. But it's a great question, so I haven't forgotten it, but we're going to move on and then we'll circle back to it. Okay, the next question for the panel is, customers continue to shape the way that financial services providers interact with them. The concept has been coined omni-channel, right? So on the device of your choice, at the time in your fuzzy slippers, I don't have any fuzzy slippers, but for those of you who transact after midnight, I'm not going to ask you what you buy after midnight, but that's another conversation. How has a technological advancement influenced the approach to innovation from your various perspectives? And I'll start with Sosh.
Yeah. For us, I think we got lucky in a somewhat high-level personal introduction within Facebook, who's wanting to really push their Facebook Messenger. And so we started exploring the marketplace a little bit, and one place we do business in a lot is Brazil. And so it's one of the first places I talked to some of our partners down there. And for them, they were like, oh, of course this is a great channel. Of course we want to move to social media platforms and messaging platforms, because they're seeing kind of, I think, a lot of people's fear here, which is they're seeing consumers deleting issuer apps, deleting bank apps, brand apps, because they're going to have, they're trimming down to maybe, sometimes 14, 15, maybe 25 apps on their phone, and that's it. And issuer apps are one of the first apps to go, right? So if your mobile app is getting deleted, you need to find another mobile channel, right? And I think that's kind of one of the big shifts is you may be thinking, oh, I have a mobile app, I'm covered on mobile. Mobile, the space just grew exponentially, right? Messaging apps have eclipsed social media usage. Okay, so people are using messaging more than they're using social media. And you guys know, that's, I think that's worldwide. Yeah, so that's pretty huge. So if you're still thinking mobile as an app, you need to expand that. You need to think WeChat, you need to think Facebook Messenger. When WhatsApp finally opens up to businesses, you need to absolutely be thinking that. And so, I think that channel is going through a big, shift. I mean, for us, that's Facebook to start, which is surprisingly fun to work with. But yeah, it's just, you got to think mobile is bigger now, or you're going to be left behind in that view.
I think the other point I'd make to that as well is that it's absolutely essential to be omnichannel. I think, Prime Day was just this week, and I was tracking deals, and it was on every single device that I had in my household. But I think one of the things that I find important is that when you're looking at an omnichannel strategy, you want to make sure that you have parity of functionality with the channels. So nothing's too frustrating than being able to be in a mobile channel and find out that you need to be on the desktop to execute a specific action. So I would say today, especially in sort of the rewards in space, it's not all too often or not always that you're able to interact with your rewards within the mobile app. You may be able to see a balance, but you may not be able to immediately redeem it or do certain actions. So that's one of the things I would say is like, it's not just about being across all channels, but make sure that you've got the functionality that people want in those channels, because it is frustrating at times when you're not able to execute in the channel that you want to be in.
Anything for you, Nilesh?
Yeah, so the definition of Synchrony is to the act of moving together. And we like that brand. We chose that brand when we separated from GE 3 years ago because we're about our partnership. So we innovate with our partners, right? We're all about our retailers. And so for example, we integrate into their native apps, right? They're developing these great apps that their consumers love, right? And we want to be a seamless extension of their brand. We should be in there. We shouldn't stand out by ourselves. As at the end of the day, we're white labeled. Our retailer's brand is the hero. We're in the background. So we integrate in collaboration with our partners.
And we heard from the folks in the room that loyalty is not an action, it's an outcome, right? So we're looking for customers to continue to engage on their terms with their issuer or their service provider. And I think that's in essence what we're talking about here, is having the customer dictate. Remember, the medium is the message. It still holds true, right? It still holds true today. Any other questions from the audience? Oh, we got one.
So, we're talking about omnichannel, but do you feel that, one company has sort of, basically set the standard for the channel, which is a voice interface? So you have Amazon, one of the biggest, retailers right now. People seem to be a little, that seems to be the sort of basically channel of the future. In fact, the Alexa or the Echo Dots work without a screen. You don't need a screen. You don't need an interface. That seems to be a little more natural. Maybe a year ago you would have thought that okay, apps are the way. But now it's a combination of voice and chatbots which are basically going. So maybe we're going from an omni-channel to just one single channel. And you had the I think so it was a 2001 Space Odyssey when you had the Howell. I think so we are there now in 2017.
We're getting close.
Yeah.
We're getting close.
And for those who don't know, Amazon does have integrated APIs within Echo and Echo Dot. And so if you fail to realize that is a new channel, like Amazon literally released a new channel where people can interact with your brand, they have. Google's followed suit with Google Home. So we're personally, like my company's not integrating with Echo Dot right now, but as soon as I get some free time, I'm personally going to be playing that with that myself. That's going to be a lot of fun.
That'll be 2025. I'm just trying to figure out the timeline for development.
Yeah, so. Or either that or my daughter will start coding with it before me, one of the two.
Gosh. We have one more question.
Just coincidentally, Igor, stand up. So gentleman Igor at the back actually invented the speech recognition technology that is the Amazon Echo.
And you didn't think you were going to meet celebrities tonight. So it's, the HAL 2000, or is it HAL 9000 reference from Space Odyssey? It's a real one. I was actually having a conversation with Igor just before we got started, and the idea of having that personal assistant that can go out there and do those things that are time-consuming or mundane or annoying in some cases is definitely something that seems to be taking on a life of its own. And it'll be interesting to see how it generates the type of stickiness or loyalty that we're talking about today. There's another question, I believe. Yeah.
So with the technology where it is today, it seems to me that the consumer, I should be able to own my own profile, my own footprint. and I go to gentlemen like you who become the clearinghouse that present my blueprint to the vendor, and they in turn can reward my benefits or my behaviors by giving me 10 times points or whatever, then I can get a very focused. Is any of that technology taking place at this point?
So I'm going to have Sosh respond to that. So the answer is there's a lot going on in this space about the Holy Grail, right? I said, I wanted to lead up to this question. The trifecta of retail is understanding the consumer, knowing who they are, right? Knowing their buying patterns and their ability to purchase, and then giving them real-time relative information or offers in the moment when they're ready to purchase, right? We've discussed that theoretically as that's the next frontier. And the amount of data that's being collected and analyzed right now make that possible, given the capabilities that we have in terms of innovation. So I'll let the panel respond to that.
We, as in the financial area, we are so vastly underutilizing that data right now. It is sad. For me, it's really exciting because I know there's so much I can personally do with that. And so, it's going to be both from the offers perspective, like, being able to drive intelligent offers. And I don't just mean, you bought a pretzel over here, you should go purchase over here. I mean, building up that knowledge to say, okay, in 3 months, it is a 99% likelihood that you're going to buy a house because you've, exhibited these specific patterns. And really where we are with, neural networks, with artificial intelligence, where, you can have, a massive brain, and like the neural networks today, they're mimicking how humans learn, right? So they're learning, they're not being programmed, they're learning. And so, and you dedicate an electronic brain to just predict if someone is going to buy a house. Now, I read somewhere kind of more of a negative side is Visa uses this to predict if someone's going to have a divorce because that can potentially cost a lot of money. Well, instead, let's flip that around to the positive side. Let's say, okay, I'm about to have a kid, or maybe I just had a kid and I need to start saving for college. I'm about to buy a house. I'm about to buy a car. Those patterns exist in your spending habits. They exist in your location data. Facebook is using that to drive intelligent ads, and they're one of the most valuable companies in the world today. I really don't think we in our industry, we have that data and we're not using it, right? Or maybe we're using it like just a little bit, and maybe for the wrong reasons.
Yeah, fair point.
Yeah.
I would say I think we're at the infancy in terms of leveraging data. I think you're starting to see that now. My prior experience, I came from a coalition loyalty program where we got down to the SKU level, and that was the premise of being able to deliver valuable content to the members of that coalition. I think this is a great opportunity from that standpoint, but it's also something that we're also being very careful about because I think one of the challenges, and also just being here in the city, like. It's about being able to send the right message at the right time. I've seen it all too often, unfortunately, where in somewhat densely populated place like New York here, where it's being targeted at offers for a specific merchant. And you can imagine with certain categories of merchants, you can't walk 5 feet without your phone going off. So I think it's not only about learning a lot of the intelligence about what to do, but also when is that right message, to your point of like, how do you graduate your consumers over time? Because I think that's also, part of the challenge is we all got our card products at some point in our history, and we probably have kept it over time. Is there a paradigm over time that we're going to be able to take that product and customize it for the life stage without having to forego it and potentially graduate to a next product? So I think, that's something that I think we're looking at from a benefit standpoint of like, could you go in and configure some of the benefits, especially as you go through life stages?
Yeah. So I agree, and now let me just take it in a slightly different direction, right? I have to work with my retail partners, and some are out there pushing the envelope, and that's a lot of fun, and all the future stuff we talk about, we're definitely there. for those of you who are service providers, a lot of these retail partners that are still back 10, 15 years ago on their point of sale, they'll tell me stories as I go in there. Hey, I went online, I identified that I need maternity clothes, and I still get baby offers 5 years later. Right? This is their story to me. Right? So the problem sometimes we have to solve is the stuff that we thought we already solved 10 years ago. We're so out there, and a lot of our retail partners aren't. So there's still opportunity, commercialization opportunity for all of us to remember we have to bring some of them up the ecosystem.
Well, here's the question that part of this was about technology and loyalty. So you have that disconnect. Are there ways we have today that we didn't have 5 years ago to start to ameliorate that? And are there ways to slice and dice data that can do a better job with less, with the same inputs? Since one cannot assume the retailer is going to suddenly do a capital investment to upgrade all this infrastructure just for the loyalty program.
Yeah, absolutely. It takes two to tango, and you have to also put a lot of investment to help them sort through their CRM. I mean, they do a great job collecting it. The actioning part is a little bit of a challenge. And so we are absolutely working in that direction, but these are big decisions. These are big enterprise-wide investments our retail partners are making. So we work with them on building the business case of how they can champion it inside. No one of our partners disagrees with any of this future stuff. They're just like, but I'm over here. So we collaborate with them to solve their problem so that we can sell a more relevant solution. And it is all about the data. I don't want to repeat what I was saying here, but you have so many sources of the data. We just do a few tests and we win right away. Just give me a file, I'll prove it to you. And we always prove it. Look, you saw a 40% increase in response rate. But to operationalize it is the heavy lifting and big investments.
Another question.
So regarding the loyalty, when you talk about in general, there's rewards, which talks about the recognition of the cost associated with that, the economics. But using that word, recognition, is a potential non-economic impact, right? So that's a contingent of your partners and of your customer and how to recognize that, right? So from a technology standpoint, managing the difficulties in communicating the marketing strategies that are associated to individual customers or customer segmentation, what advances have come along that you guys have brought to, let's say, on the issuing side, solutions? So you talked about white label, potentially your solutions customized for each individual,
right.
But you need to be able to work that in the background, sort of a broad-based approach. MasterCard has similar type solutions. Technology provider, providing one specific aspect. So what has come to market that can easily be given to, let's say, an issuer to solve some of those potential problems?
Yeah, look, so for our consumers, so for credit, we're obviously a credit card issuer, we can reach so many customers, but you're never going to get 100% of the customers, right? There's going to be a percentage of your customers that don't want credit. They already have a credit card. There's some that don't qualify for credit for various reasons, right? So good looks like 30% of the customers, maybe 50, 60% of the sales. That's what good looks like. Offering like multi-tender loyalty solutions, which allows a retailer to connect with their customers outside of credit, are initiatives that we're working on with them to give them this broader picture of their customer. A lot of them don't know their customers. They don't really know, right? So right there's magic, right? And then from there, all the good things you do with the data, including pre-approving, right? You find people might be good for credit, and that sort of funds the whole cycle and makes it worth their while. So those are the things we're doing.
Yeah, and I think it's not just, and there are so many innovations I think happening right now. Like for us personally, I feel like that's in geolocation. But also kind of where I see that going, like if you can apply those, the area that we're getting in right now is like this, all right, can I get my open rates up? And where we want to be, like where you want to get to in maybe 2 years, 3 years, 5 years, is getting so good at those advancements that it's not, am I getting them to open it? It's, is this so accurate? Is it super convenient or is it super creepy, right? Because, if like they know I'm about to go buy a car in 3 days, like it's one of those, I'm like, oh, I needed just that. Or it's like, whoa, these guys are creeping me out. Like, are there video cameras here? Like what's going on? Right, so that's where we want to try and get to with these enhancements, things like geolocation for us. I know you guys got some awesome, neural networks that you guys are playing with. So,
And I would say, I focus on the merchant side of the house. I think there's ways that we, from a transactional side, can help the merchant community. I'll give you, one quick example is that, there's no mistake that digital media buying and digital media is growing at a faster rate. And a lot of that, to me, just talking about from a personal perspective, is one of the things that frustrates me is when I get retargeted. It's not necessarily when I get retargeted, it's when I get retargeted after the fact that I've consummated the purchase. And I think this is where, from the standpoint of what we provide, is we can help close that loop and help merchants engender the loyalty and engender the right messaging at the right time. I think, with that, I think one of the other, interesting things that we're seeing in the marketplace today is that, to your point earlier, it is challenging, and I've had this background in the past of integrating with merchants. So there are ways that, from a network perspective, that we can provide some of the data that we see today to be able to drive loyalty programs and drive new models of basically outcomes based off of the data without necessarily having to do integrations with the merchants. And if you think of like some of the programs that are out there today, where if you register a card and you purchase at and transact at specific merchants, you'll get that benefit. That relieves the merchant of having to do the point of sale integration. That relieves the merchant from having to go out and train all their employees. There are things I think we can leverage the data for to help out symbiotically with the merchants.
I would personally give you money if I can be retargeted less.
Another question from the...
Yeah, so that was actually a really good segue into what I was going to ask, which is, there was some mention of how good Facebook is at this, right? But they're also really good at being creepy. And then, you talk to your buddy about ice cream, and then 5 minutes later you sit down on the computer. It's like the whole sidebar is like ice cream. Yeah. That's for ice, that's for cream. So, I'm curious, like as a consumer, I don't know, most of the time I feel like I don't want to be targeted, right? So I'm curious from the panel, like what are the best practices, or where do you see it going in a way where you can do this type of targeted marketing without making people feel creepy and, deliver value, not just throw advertisements in their face?
So I'll start, and then I'll ask the panel to chime in. So I'm not a cards person anymore. I used to run card operations for a few years. But in my mind, the way that we solve the creepiness factor is to get the cardholder or the consumer to be an active agent in these types of models, right? It's not about opting in or opting out, but actually providing clear and concise direction to your issuer or your provider about how you want to interact with them. And in my mind, that's the holy grail. When we can get there where the cardholder is an active agent and actually managing the interaction points, that to me is where it stops being creepy.
Have you ever seen it done?
No.
So an alternate point of view on that would be, spam, right? Spam is not relevant. But for people not to spam you, but they want to reach you, they understand, I'm a UConn Husky fan, went there, undergrad, grad, 4 national champion, yay. I will open anything with UConn, right? That's relevant to me and my family. And so I get not everything is that passionate, right? And I can't argue on how people feel about the creepy factor. I do think we can get better at it. And it's really about relevancy. And I think there has to be some guardrails there. And I also think it's a generational thing. I think the younger people are so used to giving their information.
And they're going to grow up with it.
Right. Yeah. They're used to this. This is normal. We are the ones kind of...
But you've already declared your UConn affiliation.
Oh, no, sometimes they're smart enough. They saw that I bought something. It wasn't just a sweatshirt, but it had a UConn on it. And then the smart ones are sending me UConn numbers. Right? Yeah. And I'm pricing elastic with that stuff. I live in Georgia, so I'm taking all that Connecticut stuff, right? But that's an example of relevancy, right? Yeah. Your passions on sports is a great place to really think about it. Yeah, the rest, I agree. I mean, some of it's like, really, I was Googling a Weber grill, and the next thing you know, it's on my...
It's following you.
Yeah. Well, the Amazon, that's in the back, but the Amazon, the Echo Dot, I think is a good example. Like, I don't want Amazon to have a speaker in my house. Or be collecting it.
So don't buy one.
Yeah. And I would say, to answer your question, it's not an offers thing. But Google, man, they rock it. Like, they remind me when I didn't even ask them to that there's heavy traffic and I actually need to leave to get to the airport 30 minutes earlier than I thought I did, right? That just saved me, like, loyalty-wise, Google just, saved my ass. And I'm sure there's people who had that experience with a job interview, and Google made them on time for a job interview, right? So that loyalty is gonna extend, exponentially. They're not gonna think twice about letting Google have that. Now, I think that's gotta be earned by each brand, though. That's the problem, is, who you're willing to.
That to getting you to buy a product, there you're loyal to the brand, but I'm thinking through my head now, how do I do that when you're trying to sell me a web?
Yeah. And of course, I thought of it immediately, but like especially with these guys where they can get the SKU level data, if they can see you're buying a steak every Saturday, right? And it's getting to be summer, then
A 50 bips increase is a win, right? I don't need 100%. I just need 50 more bips, and I paid for the offer, right? So I think so. Just be relevant to a few. They react. Try not to offend the rest.
But that's the scattergun approach, and I think that's one of the things that we're trying to get better at, right? Is it has to be laser focused based on me as an individual and my preferences and what I care about and how and the things that are important to me in this moment in my life, right? That's the trifecta. Sorry, we have another question.
So, I mean, rather than, saying it's a creepy factor, I think so there is a slight amount of utility to, basically, many of the companies have, the entire information about a person, and you are basically using maybe, machine learning as well as other type of basically algorithms to say, a particular person needs a particular type of reward or particular type of product. It is, I think so, in a way, sort of increasing the utility, because instead of being bombarded with every single offer which you are going to reject, now you have got a targeted one where this is what I want. There's someone who sort of understands you. And if you can, get away from that fact that, okay, someone has that information, which I think so, as you said, the millennials and everyone is more open towards that. Everyone was very much afraid about privacy, but saying, what, I actually want a personal sort of thing. So I think so it is going towards where you're getting a much higher utility from the fact that someone knows what you really want.
That's right.
Fair enough.
I totally agree. And I know, like, I have an uncle, I'm never going to convince otherwise, but I personally feel that way. I'm like, you know what? You're going to make my life easier. Here's my data.
I'm still creeped out by this. I'm just putting that out there because I read 1984. For those of you, I think most of us in school read that, and we're probably creeped out at the time. The lights just went out, so I don't know if that's so we're going to move on to the, sorry, we've got another question.
Let me just kind of change the conversation just a little bit and talk about the mechanical side of loyalty from a merchant's perspective and what's going on in the market today with tokenization. And I was wondering if the panel could comment on that, because many merchants today collect data in their loyalty systems based upon card numbers. And as we know, with tokenization, card numbers go away.
Right.
So what's happening in the merchant community?
So we're actively working with our partners, and they only give us tokenized information. We do not get card numbers. We do not transmit card numbers.
And so if you look at tokenization with domains, you're not going to be able to connect. If a cardholder comes today with a card and his spouse comes tomorrow with the card, those are two different tokens, and you can't connect them to have a family.
Yeah. So we have to de-token it, right? I mean, we have to have a routine, and it depends. And the example I'm using is there's a third party in the middle doing some of this stuff for us. And right, so it goes to a third party, it's tokenized, what comes back to us, we can untokenize and let the retailer know.
That's if you as the issuer are the token provider, and you have the token vault.
In our example, the retailer sends us tokenized information with their routines. Right? And then we have ways to de-tokenize it, because a third party's in the middle, and so they're just getting tokenized. They can never have the account number. And when it gets back to us, it detokenizes and we know who you are.
That's on the issuer side, but if you're looking at the merchant from merchant rewards basis, and they're dealing with what we call issuer-based tokens, they don't know, and they can't tie multiple cards together. And I mean, this gets back to the notion of par, right? And you might want to comment about, if you can, about where par stands from the merchant community side and how that's going to affect loyalty and loyalty systems. par is payment account reference number.
Gotcha. Okay, good.
And the cause of par, it's an EMVCo spec, and the reason why par was created was because with tokenization you lose access to the cardholder because the numbers change over time.
So the merchant could no longer track repeated behaviors by their customers according to the card number, since they're unique tokens and they can't tie them to one another. So par was rolled out. I don't know if it's been rolled out yet.
Par, the spec for par is out, but the merchant community is pushing back a great deal because you're opening up the same systems that you opened up for EMV.
And it's going to cost some money to implement.
Absolutely. It's going to cost them a lot of money to implement because essentially you're opening up the same systems, not necessarily
that's one thing with tokenization.
So David, sorry, you probably need to use the mic so the folks online.
Yeah. And I'm interested in the answer to that because when tokenization first came out, and knowing many of the merchants, well, that's what I wondered, was they lose the ability to do a lot of their CRM. Now with Synchrony, it's a little easier because you're closed loop, you're your own issuer. Right. But if you go into the general community, that becomes a problem. And thus they don't have as much information.
That's why I asked the question about what the merchant community is going to do about that. The merchant community is pushing back on par because it's an expense. They've already incurred that expense with EMV. 2
years ago.
Yeah. And that's essentially the issue.
It's a MasterCard question.
And you thought this was going to be easy.
And one more thing. It only applies to issuer-based tokens. Merchant acquirer tokens, which have been in the marketplace now for 10 or 15 years, it doesn't apply to because the merchant knows not only the token, but the merchant can get access to the actual card number.
It doesn't apply to network tokens as well.
Network tokens and issuer tokens are essentially the same. Yeah.
So, what do you think, Ethan?
Yeah, here's what I'd say. In certain instances, what we've done, at least on the MasterCard side, is we do have tokenization services that we do provide to our issuer communities, and some of them do it on their own as well. I think we're also creating ways to unify that. So if you look at some of our your MasterPass solutions, where you are able to keep that integrity because they're checking out through our checkout process, that's one way that you could start to close this gap in terms of the data set. I do understand, the potential outcome that you're saying here that, it's actually funny, I was looking at this the other day that earlier in my career, I was responsible for making the name on the card valued customer. And in hindsight, that's one of the things where today you're unable, even from a tokens perspective, you're unable to pull the name from the card from the token because we've anonymized it but to be fair, I think the other side of this is really around card member security as well, because it's a balance at the end of the day. There is a lot of activity out there in the marketplace. Unfortunately, there are a number of breaches, and we're trying to find a balance between protecting the consumer and also, frankly, from that standpoint, from a merchant community standpoint, the liability associated with storing all these numbers. So I hear you that this is one of the things that is potentially a trade-off in that process, but I think, we, at least on MasterCard level, we have ways for you to be able to bring that back together. It may not be the case all around, but.
Yeah. So it's kind of, unfortunately, we don't have more to offer with regards to this topic, but it does lead into the final topic around cybersecurity, because you can't talk about cardholders and customer information without having an intelligent conversation about security. And we all are aware of some of the interesting hacks that have happened over the last few months. From from each of your perspectives, how is cybersecurity affecting the way that you're managing the whole environment, not just loyalty and the economics, but the entire cardholder environment? Nilesh?
So I think this is an industry-wide, and I think our industry has done a really decent job, right? I mean, what customers want, we want to maintain customer trust. How do you maintain customer trust? Exactly what issuers and everybody in the ecosystem has been doing. Transparent, quick, communicating. That's one part of it where customers are like, okay, I'm being taken care of, and in certain situations I can get fraud monitoring. Those are good things that our industry has done. This is not Synchrony, it's all of us. Right? Now, the other side of it is, look, we've had zero fraud liability for a long time, and consumers understand that. Right? So they've grown accustomed to, okay, and this isn't going to hurt me financially, so they're fairly calm. I think as long as we maintain that, we're okay. And then personally, I've never seen sustained attrition over any cyber situation. You might have the blip for the weekend or whatever the situation was, but I've not seen the data in Synchrony to show that.
Fair enough.
I think the one thing I would add to that, I was actually talking with a friend the other day that unfortunately had their information breached, and people were opening up accounts in their name and charging them, and then he was getting the phone calls, hey, did you make this account, did you open this account, and so forth. He posed me an interesting question because he was asking me, like, this happened to me, what should I do? And one of the interesting things that I think from an issuer base and an issuer community is that we provide benefits and tools out there that you may not remember, at the time you need it, but it is part of the value proposition of the products themselves. So I know from a MasterCard standpoint, we do provide ID theft protection to our customer base today, and this goes back to the whole notion of being able to reinforce the value of not only the rewards program, but also the value of the benefits that are underlying, because you may not use them 100% of the time, but they're there when you need them. And it's one of those things that, it's an opportunity to reinforce at the right moments in time.
Yeah, we call those moments of truth in cards, right?
Yeah.
Where something bad has happened, and how does the cardholder or the issuing bank or whoever in the payments community respond to that event to give the cardholder comfort that their privacy, their security, and their funds are safeguarded.
Yeah, and I think that also ties back to kind of that omni-channel from the beginning is, all right, there's been a security issue. Are you reaching out on that particular, each of their users, preferred channel, or are you just going to send an email? Like, let's see, there's been a couple of big breaches in Europe in the past year. And, okay, were they sending out emails? I know that a number of them had to reissue the cards. So both channel and then also security. For us, one of our big things is, we can say, okay, if there's been a big breach and, this set of card numbers has been compromised, normally they're just going to shut that off, right? Turn off all the cards, reship new ones. Users are not spending on that card during those days. So like for us, one of our features we developed was the idea of, okay, you can turn the card off, but then you can turn it on for one purchase, right? So the cardholder can still be walking around with that card, still be saying, okay, I know someone else has this number, I'm just going to turn it on just for a moment, run this purchase, and then another card is not going to the top of that wallet for a week, for a month. Like, how long are you going to lose that for? Funny enough, actually, I came up with that particular feature not as a result of fraud, but I was actually just playing controls roulette and realizing, hey, sometimes, you just need to have a transaction go through. So
interesting.
Yeah.
Any questions from the audience about cybersecurity? Anything online? Did we ever check our online channel at all?
Yeah, we're good.
We're good? All right.
One other thing I'll just add on this topic, because we were on the topic of data before. I think, this is not widely, thought of, but frankly, from both an issuer and network standpoint, we are using the data to protect the consumer. We're working with the merchant community. We have products and services that can help you guys determine whether or not a transaction is legitimate or not using the data. So I think, there are definitely, as we were talking about before, benefits that we're providing directly to consumers, but let's not forget that there are things that we're using the data for to protect the consumer on the flip side of this transaction as well.
Very much so. So it's been actually a very engaging thank you guys for the participation. We're going to have a final opportunity for each one of the panelists to share some of their thoughts about the innovation in the future in the loyalty space and the cardholder space going forward. What are your companies focused in on, and what would you like to share with the folks at large?
So, look, at Synchrony, I'll go back to not all my retailers are ready for the future, right? And for them, I have to solve for their needs as well. So for them, I might be doing the strategies of right time, right place, right offer, the stuff we talked about 15, 20 years ago. That's still very relevant. Capturing data, utilizing data, driving incremental sales, because it's tough out there in retail and they can't all make the investments needed. And so we have to be part of that solution. And so there's definitely that piece of it. In terms of where we're going, the future, I don't know I'm smart enough to say the things that people in this room don't already know. But I do think, I'll go back to Facebook. I'm an active user in Facebook, and we kind of touched on this topic, but the use of data based upon my friends, I think we're just at the convergence of what is going to be loyalty and your ecosystem of friends and how you're behaving. And I think, maybe there's, we'll put the creep factor aside. I think they're going to take it to another level. I think that's why Facebook has the valuations that they have, because they've got a community and they're finding a way to monetize it, and they're using it through incredible insights. This is no longer recency, frequency. It's no longer you bought this. This is now really widening the lens of who you are as a person. And I think that we're just at the beginning of this process.
I would say here, from a Mastercard perspective, I think, we lead with a digital-first strategy. We recognize that that's how people are engaging. At no time in history can you do one-to-one marketing with all these devices that people are holding in your hands. So I think, from that standpoint, we start with digital first, but we also are looking at ways to engage with them in the channels that they're evolving to. To your point before, we've launched chatbots, and unfortunately, I think Pepper got turned off there, which is sort of sad. But we do see situations where in certain markets where labor is scarce, that may be a point of interaction, and how can we leverage things like Pepper to be able to transact for us in the future. So I think that's the piece around it for us, is that it's going to continue to change. We want to leverage the data. We want to be able to basically talk to the consumer. But I think the other piece around this is making sure that we're keeping the consumer first and removing friction wherever possible. Because a lot of times today, we might have done things in the past to artificially create the friction. The technology allows us to remove some of this friction, just as I referred to before, where we're creating, enabling new companies to create loyalty programs in ways that don't need that deep merchant integration, which we understand is a pain point.
Yeah. Fair enough. And honestly, I feel like this entire conversation has really been forward-looking. And I've already mentioned our products a few times, so I don't want to say anything about us anymore. I will say, I hope at some point, if people here in the future are either like, oh, this experience is either really convenient or really creepy, I hope it comes from one of us. Right? So I really hope we do, get there sooner rather than later.
Yeah.
So.
Fair enough. So that's the bell, by the way.
What's the bell?
We made it just under the bell. Thank you all for just a wonderful interactive session. I'm going to turn it back over to David True. I hope you found it engaging. I had a good time up here. You can't tell by my excitement. But this is really interesting. So from a Nikia perspective, that's the company that I work for. Our goal is to find fantastic solutions that help increase customer engagement, make sure things are secure, of course, and learn and use data to learn and understand how to create better customer experiences. And I think we've heard a lot about what's going on in the industry, especially in the cardholder space, and I think the future is pretty exciting. And I think you guys hopefully feel the same way and are excited to be part of it. And with that, I'll turn it over to David True.